Welcome to the Property Profits Real Estate Podcast, the show where real estate investors talk strategy, capital, deals, and growth with your host, Dave Dubow.
Hey gang, welcome back. Today our special guest zooming in from Detroit, Michigan. Terry Judge has a lot of experience around real estate and numbers. Terry is a real estate investor himself. He's been involved as a limited partner in multifamily deals. These days, he's a little bit more involved in the development side of things. He's got a couple of exciting projects on the go. And he also helps us real estate guys and gals and all sorts of business people with their numbers. And we're going to be talking about that today. So Terry, welcome to the show. Great to have you.
Thanks, Dave, for having me. Looking forward to it.
So let's talk a little bit about what you're up to in the real estate space first, and then we'll talk about how to help people save money on taxes with their real estate.
Yeah, yeah, great. So I think part of when you're making money and you're building a business, you're getting hammered on taxes, and obviously taxes is whether we like it or not, it's a big part of our wealth journey.
Yeah.
And our growth. And so I was forced to kind of look outside of my normal CPA, my traditional CPA. All I was getting from her at the time was compliance stuff. Hey Terry, it's that time, send me some of your stuff. So at the time I'm like, well, God, I got to start figuring this out. So I was already kind of around the real estate space with my business. And
what was that business at that time, if you don't mind?
It's still the same. I've been doing this for 20 years. So I own a nationwide cost segregation and specialty tax firm.
Okay.
So obviously I'm around it. I see it. And I'm like, I got to start getting involved on the other side and start learning how to invest. And the best place that I can recommend and things that with for me personally, I partnered up with successful operators that were already doing it and threw in some money. I could see that I could, not only get a nice tax side benefit, but also I could get cash flow. And I needed to diversify out of the stock market. So I think that was something that even my wealth advisor was like, you should probably start thinking about, putting your money into some real estate deals. I'm like, wow, that's kind of interesting coming from a wealth advisor. They're usually like, they want to make money on the portfolio.
Mutual funds, yeah.
Right, mutual funds. And so thank God I have at least somebody that was thinking out of the box. And I started talking to some operators and then threw some money in, started, with a smaller amount just because I wanted to test the waters. And those were multifamily. So back in the heyday, 20, 21, 22, 23,
hard to go wrong.
Yeah. Those tax years, you could throw money in and you're going to get it. You're automatically, as long as the operator doesn't tank and doesn't kill the investment, you're in pretty solid shape. So I was getting 12 to 15% return on my money, got a little tax incentive, but then realized because when we talk about wealth building and your status, you're either you're kind of a passive guy or you're an active guy, and I was kind of more on the passive side, but after investing a little while, learned how to kind of move myself over to the more of the active side of the fence, where now I could take an active role on my K-1 for my tax returns and material participate in some of the deals I was in. And that's, I think, we'll talk more about that. But so now I'm a partner, straight partner, a joint venture, as we call it, not a syndication. These are the kind of deals that I personally look for now, where I can take a straight active role. I'm participating kind of on the GP side, but it's not it's not a GP LP, but I am putting hours in where from my tax background, I'm able to take an active role. We can talk more about how that breaks down because there are tax strategies for high net worth W-2 earners that I've learned how to do the hard way as well that I'm happy to share. But this was one way that I could mitigate my taxes. I could step into learning more about becoming a developer and more of a real estate investor because, as I get older, I'm start thinking, okay, maybe one day I want to sell the company and move more into real estate, development or just pure investing, right? So you have to learn it somehow, and that's kind of the best way I found to kind of learn it.
So what are the development deals that you're working on right now? We talked a little bit off camera.
Yeah. So the first one is a what's called Premier Academy. It's a kind of a higher level daycare type operation. And my friend here in Michigan I think he owns 5 of these. And I said, if you ever need money or if I ever can get involved, I would love to, jump in. And so I was able to, well, one of these deals, he allowed me to jump in. I took a 10% active role, not only in the business, but also in the building. And then obviously we cost segged it, which we can talk about that. So I got a nice upfront tax benefit from the strategy, cost segregation,
Mhm.
which basically gave me it was almost a wash of what I had to put into the property as far as a down payment to buy in, right? And then the tax savings were so great, I actually came out of it with a surplus. And eventually, once we stabilize it, which is going to be soon, I'll start getting a monthly distribution check as part of my retirement. So those are some of the things.
Nice.
The second one, I'm involved in a ground up hotel, beautiful hotel. It's going to be a Marriott Autograph, and it's called the Syndicate. It's got its own name, but it's obviously it's a Marriott property. And we're very excited about it. It's right on Lake Michigan. It's beautiful. We had a hell of a winter last winter, so it slowed everything down. We had issues, but we've now we're rolling, and you see videos of it every week and these updates. It's great. So I'm very excited, and I'll learn more about the operational side once we can get it going. But we've already been offered, like a big company came out of the woodwork and offered us this crazy amount of money. So even if you're building these projects, there's a lot of risk, there's uncertainty, you're overcoming. We got sued from the hotel property owner next door. It was just like constant issues, right? So, but you work through it, and you can add some real numbers if you do it right, to your net worth and also an exit. So we already have a built-in exit strategy, whether we want to sell or not. So those are some of the exciting things that I had to kind of learn as a secondary career, going into real estate investing. It's
So
a
what
fun.
role do you play now that you're more of an active partner in these deals versus just an LP?
So this is where the rules are the rules.
Yeah.
And the IRS says, if you material participate, for me personally, because I'm now the tax guy on both of these projects. So I'm on all the Zooms, I'm on all the calls, I'm working with the accountant. We're not accounting, but we are on the tax side. We're running benefit analysis numbers. We're looking at, okay, if we sell this, we're running recapture numbers based on if we sell it, does the IRS want some of that depreciation back if we sell it, under 3 to 5 years? What does that look like? Do we 1031 out into 1031 exchange out of the
Mhm.
property? Do we hold the property? Let's run numbers. If we hold the property for 10 years, what does that look like, to our exit if we hold it a little longer than just sell it after we stabilize it after a couple of years? So all these variables I'm involved in. And I went to my CPA and I said, "Hey, is this, I'm not a real estate professional by status. I mean, I still run my business, but my hours have come way down in terms of my day-to-day operation,
Yeah.
for my company, and then I'm now heavily involved over here. So technically, I think I'm at that point where I qualify as a real estate professional, and I need to get that status. My CPA has already kind of claimed me on these two projects, but I think going forward, because I do own some other property and an Airbnb, that kind of thing. And I'm trying to be active in my tax strategy planning each and every year.
Mhm.
And that usually includes something. I have to typically buy a building or do something to mitigate
You
my,
have to
my
have an X number of hours or something like that. Is that
yeah,
correct?
well, there's different levels of
Okay.
what they qualify for, but the main one is 750 hours a year. You're doing that, and you're doing that more than any other business that you
Oh,
own.
activity. Right.
You're
Right.
still more active in that role versus in the other roles.
Got
And
it.
that's how you really claim a real estate professional status. But get with your CPA if you're curious about how it works. If you're doing just Airbnb and short-term rentals, that's way different. That is just 100 hours a year that you material participate. So a lot of people are buying short-term rentals, maybe for the right and or the wrong reasons. So
Yeah.
just make sure you're buying it correctly. Airbnb's, the industry has changed drastically. But if you do it right, you buy it right, it is still a tremendous play to mitigate, because you can take 100% bonus depreciation, off your active income. It really moves the needle, and then hopefully you're getting renters in there and you can cash flow it. And it was a good buy for you, but you got to be careful.
Well, let's zoom out for a second. Let's
Yeah.
talk a little bit about your primary business.
Okay.
So just Cole's Notes version, what do you do in that business? You
Yeah,
mentioned
so
it
I
at
don't.
the top. Yeah.
Yeah, back in 2006, so 20 years. We just hit our 20th anniversary, by the way.
Nice.
Nice little
Congratulations.
milestone we're celebrating along with our
Yeah.
250 anniversary. Um, I started that company in 2006. It kind of fell into it by accident. I used to be in the kind of the lighting energy business. It cost seg. I wasn't a tax guy. I was more on the engineering side,
Yeah.
and maybe that's why my brain gravitated towards it. But yeah, well, somebody sent me some email regarding cost segregation, and I literally called my CPA that same day and started asking all kinds of questions. Found out that not a lot of people know about it. Not a lot of CPAs do it. And the magic question was, it's legal. Because I asked, is this legal? Like, is this sounds
Mhm.
kind of almost too good to be true? And the one CPA that was very prominent here in Michigan said, not only is it legal, but it's been around, it's been in the tax code since 1969. And just that alone got me kind of like, okay, this is a kind of a niche business. I feel like the product itself is going to help people. It's going to be a lot of education, and we launched the company in 2006, and we've been doing it ever since for 20 years.
Who are your primary clients that you work with these days, Terry? Obviously, you do some real estate, but you work with more than just real estate investors as well, right?
Well, I mean, a lot of so on the cost seg side, it's all real estate investors and
Mhm.
developers. We've got some big names that are now clients of ours, big syndicators, big developers, and I'm just honored to serve them, at a high level. And I'm honored
Mhm.
that they come back to us because we feel like we do a great job for them. Or at least we're striving to do a great job for them each and every time. And these are some big projects going on, not only in Detroit, because obviously everybody knows about Detroit. It was a kind of a big comeback. I mean, our city was in the toilet for many, many years with corruption.
Yeah.
So a lot of new development downtown, a lot of new buildings, hotels, apartment buildings, and it's very cool to be a part of that. So I do a lot of real estate, not to mention any names, but I'm just saying that a lot of big names that you would probably know. Um, and on the other side, for businesses, we also do the R&D tax credit, which is an innovative tax credit. It's a dollar for dollar tax credit, and it's all about for businesses that are innovating. Maybe they've developed some sort of process that's unique to their business. Maybe they've developed or they've modified some software. It's a wage-based tax credit, and it's in any business that like bakeries qualify. I mean, construction companies qualify.
Mhm.
Obviously, manufacturing, AI, all this stuff basically drives this thing called the R&D tax credit. So we've been involved in that in almost 18 years, and that's a very interesting service that we offer because it's a big impact.
Mhm.
It's a dollar for dollar credit off wages paid each year. We can go back
That
three
would be huge.
years. Yeah, we
Yeah.
can file a refund. So, and then they get it every 12 months going forward once we get them kind of on the circuit.
And how long does it go for? Is it just a permanent thing at this point?
It's permanent in the tax code now.
Wow.
Yeah, so
Wow,
it's
that's
gone
huge.
through some the one big beautiful bill that everyone knows that Trump passed a couple years
Mhm.
ago. That there was a big reprieve. There was something in the code that was limiting innovation, and there was a cap on the credit. It was they I don't know. Anyway, not to bore you, but we that was removed, and it's now flourishing. Matter of fact, Canada has an R&D credit as well. It's different, a little different, but they do have an R&D credit. So
So
anyway,
bottom
those are the
line
two
is
things
your
I do.
business is all about helping businesses and real estate developers and investors save taxes, save on taxes. That's kind of the core service that you provide. Is that
That is the
yeah.
main thing, David. We do we usually we do an assessment on the beginning whether it's real estate ownership or whether it's business innovation. We do the same thing. We do a 15-minute discovery call and we break down where maybe where they're missing this.
Hmm.
And then we connect the dots. We do a free analysis, free savings report. We actually can pinpoint what those potential savings would look like, and we offer that at no cost. And then also we'll talk to their CPA if need be, just kind of make sure everyone's on the same. Because a lot of times the CPAs, this is not their forte when you go down
Right.
this tax strategy side of their world is compliance
Hmm.
and making sure that you're you're getting your returns filed, and they're just taking data from you,
Yeah.
right? This is just kind of like more planning, more of a deeper dive. We work with CPAs, great, and kind of teach and educate the CPA community how all this stuff works and how it can add value to their firm and their clientele. So we work with
Yeah.
hundreds of CPAs now around the country, providing this type of service for their clients.
So when it comes to the real estate investor side of things, like who's kind of your ideal client range? So, I mean, where
Yeah,
does it make sense for somebody to work with a company like yours?
yeah. So it really is vast. I would say any real estate investment property that generates, it's going to have a tenant in there. It's going to generate some type of income. Anything from $500,000 in more would be kind of our sweet spot. So $500,000 on the low end. Could be a short-term rental, could be a single-family rental, could be a small
Are you
multifamily.
talking about revenue or value of the property?
No value, no revenue, just really what the purchase price is.
Okay.
And when we back out the land, we have to actually remove land cost out because a land does not depreciate.
Mhm.
So we move out usually 10-15% of the cost of the land. Then that's our basis. We attach our cost segs to the actual real estate and start from there. Usually it's about $500,000 or more.
Yeah.
And we're typically saving, so let's just call it for easy math for your listeners. Let's just say the property is $1.2 million. Okay, purchase price $1.2 million. We took $200,000 and we put it into the land. We have $1 million in real estate costs, everything inside that building. We're usually seeing about a 30% return. So that usually we're going to probably save the client about $300,000-ish, give or take. Just so you kind of get a sense of how big this is. So for every $1 million, it usually generates about a $300,000 tax savings
That's huge.
or tax depreciation
Yeah.
that can come off right off the top.
Awesome. Well,
Yeah,
Terry, time flies when we're having fun here, my friend.
that's
So if
it. I was
people
just
want
getting
to,
rolling.
I know, but it's a 20-minute chat. So if people want to find out more, connect with you, most of our listeners are on the real estate side of things.
Yeah.
Where should they go?
Yeah, I would say the simplest, just reach out to me via email. It's my name. So it's Terry Judge and then the company name Core, CORE, Advisors, ADVISORS.net. Feel free to shoot me an email, and we'll connect and talk and see if we can help you out.
Perfect. And people just kind of want to check things out and take a look. Does the website have some information?
Yeah,
as
you can
well?
go to www.coreadvisors.net. The parent company is called Core Solutions Group, but we kind of have a DBA, Core Advisors, just to shorten up the name. But either one is going to lead you to our website. So you can go to coreadvisors.net, check us out. You can reach out there. You can actually do a free analysis right on the website without even talking to anybody. It'll just be submitted. One of my staff people will get back to you immediately. We'll set up a call, whether it's me or somebody else. We're happy to jump on and walk you through it.
Perfect. Terry, this has been great. Thank you very much for sharing some wisdom here today.
Thanks, Dave. Thanks for having me. It was fun.
All right, everybody, take care, and we'll see you on the next one.
Thanks for listening to the Property Profits Podcast. If you'd like to be a guest on the show, apply at daveinterviewyou.com.